Hey, everybody. Welcome back to the Be Your Own Bank podcast. It's that time of the week, the weekly roundup.
Nice. Thanks for tuning in, guys. I know it's been a bit, but we're back. Starting off, we've got the CFTC versus the SEC. We love acronyms here. So the CFTC stands for the Commodities Futures Trading Commission.
Okay.
So they deal in commodities where the SEC deals in securities.
All right. So commodities and securities. Let's go over that real quick, right? So a commodity would be something like coffee, and a security would be something like Starbucks, right? So a business or a service would be a security, and a commodity would be a thing or a good, right?
Yep, absolutely. So they both are regulators in the government dealing with the financial sector, but one, the CFTC is focused on commodities. The other is focused on regulating securities. So the CFTC is actually in a battle right now with the SEC because they feel that they are more equipped and should be the sole regulators of the crypto market.
Regulators.
So their reasoning for that is, you guys may not know this, but Bitcoin and Ethereum have been identified as commodities in court hearings already over securities. And Bitcoin and Ethereum take up over 60% of the entire crypto market.
Yep.
And so by that logic, the Commodities and Futures Commission, they think that they should be in charge because a majority of crypto has already been identified as commodities.
I think it's a pretty clever thing for them to do. I mean, obviously, if they're working in more of the derivative space, which derivatives are kind of the betting on the future of, you have a stock and you've got, you're playing options on the stock, or you're, doing swaps, or all these things where it's just like, this is what it's going to cost in the future, and I want the right to buy it at a certain price.
It's kind of like investment gambling in a way.
Yeah, I would say that's true.
Which is why the whole AMC thing blew up, because all these big companies were betting that AMC and GameStop would go down because, why would they be successful? There's all this new technology that's going to outpace them. People are able to watch their movies at home during COVID. People can just download their video games.
Streaming, yeah.
So it just makes sense. It was a good hedge, I guess, or a good bet on these hedge funds' part to say, you know what, we're going to borrow these shares, we're going to sell them, and we're going to anticipate a drop, buy them back, make a profit, return the shares. That's kind of the thing. But of course,
Reddit said
we know that they're
the magic word.
We know they're going to short it, so we're going to short squeeze them. We're going to buy up all these shares, force them to buy them back
at a higher price
because they're on loan and they have to return those shares, otherwise they're out of luck, and it caused them to lose a lot of money. In a nutshell.
Yeah, no, that's true, and right? That's what the CFTC is regulating those. That derivatives market that's a little more speculative. It's similar to the crypto market, which is still pretty speculative. So I think it makes more sense that the CFTC is in charge of this market as opposed to the SEC, which just seems to be kind of the Debbie Downer in this whole situation.
Well, and they're the kind of black and white regulators, It's if it's a security, you have to follow these protocols, these regulations, these ways of keeping tabs on what you're doing, and it can be cumbersome on a free market that's transacting billions and trillions of dollars.
Well, and you don't want somebody regulating something new that they don't understand. Right. I mean, the securities, the rule on what a security was basically litigated back in 1946. So what a security is, and you can look it up. It's called the
Howey test.
Howey test.
Yep.
And it was a court case that explained what a security was, but they've been utilizing that rule since 1946. So what is that? 70 years?
Yeah.
They haven't updated anything from that. So, those are the guys who are in charge.
We're looking at more of 80 years.
I didn't do the math.
Okay. All right.
80, whatever. it's a lot of years. It's more years than we should have had some updates to the program.
Should have had updates, but basically it's just a set. I mean, we're not going to go into too much depth on it, but it's a set of 4 rules. And if all 4 of those rules are met, then that thing is considered a security.
Right.
But if any of them are not met, then it can't be considered a security. So that's already been proven so far with Bitcoin and Ethereum that they don't meet all of those 4 tenets. So they're not a security. And that's why the Commodities Commission wants to be in charge of regulating it, because they feel like it's in their jurisdiction.
Right. Plus the fact that, as I was just saying, the SEC is kind of the old school, they are the old school. And the CFTC is hey, let's bet on the future, right? Yeah. Quite literally with derivatives. So I think it makes the most sense right now. Are they going to do it justice regulation wise? I don't know. Are they going to get it out from underneath the SEC? Maybe. Are they going to work with the SEC? That might be the best solution. We'll see what happens.
Yeah, but what we've found is that if the SEC does win this case with Ripple, which I'm sure you guys have heard a little bit about, it could cause a lot of value to go out of the crypto market, and also people to start migrating, because you can't destroy crypto, but if you migrate it out of the United States, that's going to leave us as investors out of the loop in a way. And
they'd be so stupid, because if the SEC overregulates, especially Ripple, if they win the court case against Ripple, Ripple's out of here. They're going to leave the country. That means investment in the country is gone. That means any proceeds from taxes on their company, all of those things are bad, especially because this is the future. So why, in good conscience, I think the best solution is to just settle out of court for whatever money, and then use Ripple and Coinbase and all these guys who are like, we're here to help. We're
experts. We want it to work for everybody.
Let us help you.
We know you want money. We know you want your tax dollars. That's fine. But don't hinder the transactions, the trade, the exchange of goods and services that people want. Don't convolute it to the point where it's too hard to even use the way that it's meant to be used.
Well, and talk about innovation. I mean, everybody strokes Elon's ego, right? It's like, because he's doing good things, because he's consistently evolving, because he's ahead of the curve. That's what crypto is. That's why we need to invest in it and have people regulate it who understand that and want the future to be more efficient and smooth sailing with regulation if you do it right. And then everybody's making money.
Yeah. This doesn't have to be an us versus them. Everybody can win.
Right.
Everybody can win.
Which sounds ridiculous, but
it does, but
it's possible.
It is. And it's been proven. I mean, I think this segues a little bit into our next topic, which is the banking industry in general. They're trying to get in it because they see the potential, and they're the most old school of all. I mean, banking has been around for hundreds and hundreds of years.
Yeah, I think 70 years. Yeah.
70 years.
That's it.
But just recently, actually yesterday, the chair of the Federal Deposit Insurance Company, so the FDIC, the people that say, you know what, all your money in your bank account is guaranteed up to $250,000.
Right.
They're trying to get in and make it accessible for banks to allow you to store and trade your crypto, but also to use it as leverage, aka Nexo. They're trying to get in on what these crypto banks are already doing. These traditional banks, US Bank in particular, is already working on it. So that, and they manage over $8.6 trillion.
They have the name recognition.
They have the name recognition. So they're basically saying, this is working. We want a piece of it because we're not making as much with US dollars. So let's bring in crypto. We'll use the same traditional lending practices. Yeah. We'll figure out how we can make it easy. But you already trust us, right? Because you already use your TCF bank account that you've been invested in since you were 6 years old.
Whereas they're taking your money and they're putting it, in the bond market, and they're making 2 to 3%, but then giving you what, 0.10%? Like, come on, not even
0.01%. Your money doubles every 8,000 years in your bank account.
Say that again?
Your money doubles every 8,000 years in your bank account.
Say that again?
8,000 years.
Wow.
Yeah. Or with Bitcoin, it
doubles every year,
every 6 months. Anyways, the point is they're not dumb. They see the future, the potential. They're all about money.
But why wouldn't you want to be your own bank, right? Because if you're at Bank of America, US Bank, Wells Fargo, all these places, right? It's like, and you're buying Bitcoin and you're keeping it safe and yada, 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 right? But you're getting that fraction of a percentage point, right? And then they're making money on your money, as opposed to just keep it to yourself. Go to Nexo, go to BlockFi, which just upped their interest rate.
That's good.
Which is nice. It's like 9%.
That's crazy.
On USDC.
But the thing that concerns me about, it doesn't surprise me, but it concerns me that the banks are getting into this is because it defeats the entire purpose of cryptocurrencies, which is taking a decentralized peer-to-peer system and making it a totally centralized system.
And how are they possibly going to make it any simpler? They're not.
Well, I think what they can make simpler that the Nexos and the Celsiuses can't do is, sure, you can take out a loan. You can collateralize your crypto, meaning that you can say, you know what, I'm going to put up one Bitcoin and take out a $25,000 loan, and that'll be credited to your bank account. The thing that I see US Bank or TCF Bank doing is saying, you know what, you save your Bitcoin in here. We'll create a loan for you, and now you can use your Bitcoin as collateral to take out a mortgage or to take out a car loan, which actually would make it easier for you because you wouldn't have to, show a credit report.
Right.
It's kind of a hybrid system.
No, okay, I see that. That makes sense.
And that could be good, but the danger that I see is the more you centralize a system that is inherently decentralized, the more risk you put in its integrity.
Sure.
And its sustainable future, because if you're giving these banks too much power over your money and they're doing whatever they want with it, it could be a Bitcoin mortgage crisis, and then the banks are controlling the value versus the people who invest in it. Right.
Because then the bank becomes the whale in that situation.
The bank becomes the whale. And Coinbase, admittedly, Coinbase is a whale, but they're not a bank.
Right.
They're not, hopefully, lending out your Bitcoin. They're storing it for you.
But how are they possibly going to be doing that before regulation? So, that's on the horizon, but still, I think ultimately be your own bank.
Be your own bank. And that's the option, right? And that's still great. So granted, US Bank, TCF, Wells Fargo, they can do all this. They can be like, you know what, put up all your Ether and you can take out 25% of that in a loan as a down payment for your house. And you can still keep it in there and we'll keep it safe. And the FDIC will insure it, which is a good thing. I think that would make people want to use that platform a little bit more. It would entice people. And I think it would be more for the newcomers who aren't as educated in being their own bank and want the risk and liability of having to manage their own money when they already trust an institution that's been managing their money for their whole life. It makes sense.
Yeah.
So there's pros and cons. I worry, being, someone who's deeply invested in crypto and has known about it for a long time and knows the inherent truths about it and what it's supposed to be. I worry that the more power you give to central authorities with this decentralized thing, it could jeopardize the system.
Yeah. Truth, facts. Like, I think the practical application potentially, once everything's become regulated and we do have a centralized coin, right? Is that the banks will play Miracoin will play a significant role, but hopefully they don't overstep. I think that's the piece that it could be trouble if they decide to take this decentralized world and centralize it other than having a US dollar coin, Miracoin.
But I also, and I think not doing enough justice or giving enough credit to the millions of current investors in crypto that kind of live and abide by the decentralized notion and being their own bank. There's so many people that do it, that maybe it wouldn't be a problem, because the few that would choose to use US Bank, or even the ones that are using decentralized platforms now, might use some of their crypto in one of these centralized platforms just so they could take out a car loan or a mortgage.
Yeah.
or a business loan.
Or a Bitcoin CD,
Bitcoin CD that gives you 0.02% interest.
Yeah.
Yeah, I mean, I think it'll lead to better regulations either way, because there have to be more regulations if
well, it's also
US
people are going to understand it better. You don't think if U.S. Bank wants to get in on it, you don't think they're talking about educating their constituents on what crypto is? I mean, Coinbase has their Learn platform, which is awesome, by the way. I just made another $3 in whatever coin I just
doesn't matter.
Doesn't matter. Doesn't matter.
Yeah.
But I mean, it's fun because they're investing in that and they're willing to throw you $3-6 at a time, which I think with Coinbase Learn, I've made like $400.
Yeah, it's insane, because the earlier you learn, the faster you get the money and the more it grows over time.
Boom.
So your $3 turns into $30 in no time. Yeah. So it's great. I think education is definitely necessary, and I'm sure they'll be doing that because they have all those commercial lines. You might just see Bitcoin at US Bank. Check it out.
Oh, you're going to see
earn $10
commercials,
if you
everything.
Read this article.
You're going to see US Bank's flow. You're going to have all that. It's going to be ubiquitous.
It's awesome. So last thing we wanted to talk about today in the roundup was Walmart, another huge company. They just announced that they will be adding at 200 stores BITCOIN Kiosks, basically Bitcoin vending machines.
Wow.
Yeah. And these are already present at over 8,000 other stores, Hy-Vee, CVS, Cub Foods. It's called Coinstar. It's been around for a while.
That's the one where you get your bucket full of change and you pour it in and then it goes, right?
Yep.
And then they charge you like 13%.
Yeah, I don't know what the percentage is, but I'm sure it's not great. And then you can get a voucher or you can donate that money. But now Coinstar's partnered with CoinMe, which is an application, Bitcoin wallet. So you can literally go into Cub Foods. You can go into Walmart now at over 200 locations.
That's so crazy.
And you can, for a 4% or a 7% fee, depending on how.
7% is what they charge?
Yeah. So 7% is for, let me look it up.
Wow.
So a transaction fee of 4% and a cash exchange fee of 7%.
Oh, so if you took your Bitcoin and wanted to turn it into cash immediately, they would charge you 7%.
That's what I would assume.
Yeah, that makes sense.
And so you will receive a voucher that can be redeemed for Bitcoin instantly. So you have to have a CoinMe account, which is basically the Bitcoin wallet. I'm sure you can send it out after that, but you have to have that, and then you can use one of these Bitcoin vending machines to get your Bitcoin.
That's so cool.
Yeah.
I mean, it's a start,
It's a start. The fees are ridiculous, but I mean, for someone who's
just having the name recognition. Yeah, exactly. Right.
Someone's putting $20 into the, Minnesota State Lottery, and then you got the Bitcoin kiosk right next to them.
Exactly. That's a good point.
Maybe they'll think, I'd rather invest than gamble.
They won't, but
maybe they have another 20.
But it's that name recognition, right? It's like you see it everywhere. You can't ignore it now.
Yeah.
Right?
It's free advertising.
Yeah.
Which is all we can ask for. Because it's decentralized, there's no central advertising authority. So the people that are in the companies that are going to be making the most money off of this are going to put the most news out that will help grow this.
Well, like FTX, we were talking about FTX.
I just saw a soccer game that I was watching, and they had a crypto.
They're spending $20 million with Tom Brady just on ad campaign.
It's crazy.
And now in the World Series, I think each moonblast home run.
You said that, yeah.
Well, before it was 1,000. I think it's 10,000 they're giving away for each home run in the World Series.
Well, hopefully they hit a lot of home runs.
Yeah.
Yeah, it's impressive. It's exciting. Hopefully we can get these regulations done right, not necessarily done fast, but done right so that everyone can benefit.
Yep.
And that we can keep being our own bank.
Makes perfect sense to me.
Makes total sense to me.
All right, that's it for the roundup. Let's get to these charts. First, let's take a look at Bitcoin. We have, that's right, a new all-time high at 66,660 something. So we are still bullish. We did get a little pullback here, which could be expected. Obviously, it hit right off of our support line here at about 58 and then printed a bullish engulfing currently. So we are still on track to go even higher. I am looking at one thing on the weekly, which would be known as a shooting star pattern. So that's when you have an uptrend and then you get this bearish hammer at the top of the uptrend, then this continues to fall down. So if we can print below this bullish candle, that would be a sign of a reversal. But I think even if we do get a reversal, the worst case scenario would probably be back down to this $50,000 range. So our total market cap, 2.5 trillion, which is still small. Remember that, gang. We went above the resistance, then came back and touched it. Now we have the chance to go even higher. Be careful, but now is a good time to start looking at more opportunities in the crypto space. Some of the coins that we are tracking, some of the ones that we've already talked about that are making moves. We've got Polygon is broken out of its bullish flag formation. Engine Coin is breaking out of its bullish flag formation. Algorand is breaking out of its bullish flag formation. Atom is breaking out of its bullish flag formation. HBAR is not breaking out of its bullish flag formation yet, but it's only got a little bit more time before it makes a decision. Keep a look at that. Our dollar cost averaging this week, something I never thought I would say in a million years. I'm buying more Dogecoin. Doge is the next thing to pump. That is what the charts are showing. Our second is OMG, Omizco, only about $13. And lastly, we've got Polkadot, which is kind of a newcomer, but very popular. And I believe it's 8 on the market cap right now. So it's got a lot of room to grow as well. That's it for the charts, gang. Remember, we are not licensed financial advisors. We are only here to help. Please do your own research and only invest what you're willing to lose. We'll see you next week.
See you next week.